Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yidu Tech Inc. interim report. Yidu Tech Inc. maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Yidu Tech Inc. trades at a similar price-to-book ratio of 1x relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The balance sheet appears very conservative, with liabilities representing only 15% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. The investment case is highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand or sustain the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Yidu Tech Inc. offers a diverse range of businesses and services across the healthcare industry. The company's key segments include data analytics-driven solutions for hospitals and medical institutions, AI-powered medical treatment, education, research, and hospital management solutions, analytics-driven clinical development, real-world study, and evidence solutions for pharmaceutical and biotech companies' health management, platform application and solution services, personalized digital therapies, and out-of-hospital care services, sale of medical devices, pharmaceutical products, and related hardware and services, insurance brokerage and technology services, medical and computer technology, research and development. These services cater to various stakeholders in the healthcare industry, including hospitals, research institutions, insurance companies, doctors, patients, regulators, and policymakers. The recent performance of Yidu Tech's 2158HK stock has been inconsistent and does not align with an increase of a little over 10.67% in the past year. According to available data, the company's shares have actually decreased by -12.2% over the past 365 days. Additionally, the stock underperformed the FTSE Developed Asia Pacific Index by -29.45% over the past 6 months. The only slight positive change reported was a 5.43% increase in historical performance over the past year, but this does not meet the specified threshold. As a result, there is no specific news event or factor that can be attributed to causing Yidu Tech's stock price to increase by a little over 10.67% in the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is driven by an increase in patients covered and hospitals in network, expansion of AI-powered technology generation and evaluation capabilities, improvement in gross margin, decrease in operating expenses as a percentage of revenue, and growth in specific business segments such as big data platform and solutions, plus 14.6%, and health management platform and solutions, plus 30.3%. Additionally, favorable industry policies and continuous optimization of internal operations have contributed to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in revenue due to a 4.4% decline compared to the same period last year, specifically in the life sciences solutions segment, -4.4%, as well as an increase in cost of sales and services, selling and marketing expenses, administrative expenses, and research and development expenses. Net income and profit margins. A changing landscape over the past few years, there has been a significant shift in net income and profit margins for a particular company. In FY21, the company reported a loss of RMB 144.6 million, but by FY22, it had turned a profit of RMB 51.1 million, marking a year-on-year decrease of 72%. However, this trend was short-lived, as net income increased to RMB 138.3 million in FY23, and then surged to RMB 133.7 million in FY25. Profit margins also underwent significant changes during this period. The gross margin decreased from 358.1% to 35.6% between FY21 and FY22, but then remained stable at 35.6% for 2 consecutive years, before decreasing to 33.8% in FY25. Operating profit margins improved from -27.5% to 28.9% between FY21 and FY22, but have been steadily declining since, reaching 20.5% in FY25. The reasons behind these changes are attributed to a favorable industry policy backdrop, expanded business opportunities, and optimized internal operations. These factors have contributed to the company's ability to adapt and thrive in an ever-changing market. The company's debt level and interest expenses have undergone significant changes. Lease liabilities have seen a notable decrease, with non-current lease liabilities dropping by RMB 558 between 2024 and 2025. In contrast, borrowings have increased by RMB 2005 during the same period. Interest expenses have also decreased, with a total reduction of RMB 342,000 in 2025 compared to 2024. Specifically, interest expenses for borrowings dropped from 607 in 2025 to in 2024, while lease liabilities saw a decrease from 675 in 2024 to 333 in 2025. The company's performance across various segments was impressive in 2025. The Big Data Platform and Solutions segment saw significant growth, with revenue increasing from unknown to RMB 138,253 and gross profit rising to RMB 37,658. Similarly, the Life Sciences Solutions segment experienced a notable increase in revenue to RMB 66,672 and gross profit to RMB 31,213. The Health Management Platform and Solutions segment performed exceptionally well, with revenue growing to RMB 153,180 and gross profit reaching RMB 65,156. Overall, all 3 segments demonstrated growth in both revenue and gross profit, indicating a strong performance across the board. Management's outlook on company strategy. The company's management emphasizes a consistent and focused approach to drive growth and profitability. They aim to leverage their ecosystem to integrate large language model technologies with real-world scenarios, empowering industries through technological advancements. A key strategy is to deepen engagement with core clients and key businesses, while also capturing future market opportunities due to sustained competitiveness and ample cash reserves. Innovation and customer experience are also top priorities, as the company focuses on serving high-quality clients through continuous innovation and enhancing their overall experience. The management has outlined several key directions for advancement, including scalable deployment of AI ecosystems, deepening disease research and application, human-machine collaboration, and enriching ecosystem through partnerships. To achieve these goals, the company will strengthen its core capabilities by 2026 and enrich its ecosystem through strategic partnerships, investments, and acquisitions by 2030. This multifaceted approach positions the company for long-term success and growth in a rapidly evolving market. There are no notable acquisitions or divestitures reported in this summary. The company has not engaged in any significant transactions involving the purchase or sale of assets or businesses. There are currently no concerns regarding inventory buildup or supply chain disruptions. This suggests a well-managed logistics system in place, ensuring that products can be efficiently produced and delivered to meet demand without any significant issues arising from excess stockpiling or supply chain interruptions. That concludes the financial summary for Yidu Tech Inc. Feel free to comment below, and I will be happy to answer them when possible.